Hello viewers, how are you all doing? I know you are all doing really well. Namaskara and welcome to the inaugural episode of Rupee Rakshak News channel. I am your host Raghu Rao. Every week I am going to take you through precisely those things that are important for you to grow your money and few other things to make the money part more interesting. Today we start with our inaugural episode, which is an Independence Day special from Rupee Rakshak. Rupee Rakshak is a brand of Finmo Investment Advisors Private Limited, a SEBI RIA number INA 2001490. So, whatever views we share on the financial markets for the week is from a registered financial advisor. And it's for your benefit and education, but this is not an investment advice. So if you need investment advice, you're welcome to go through our website rupeerakshak.com, contact us, and if you like our coverage of views and news, subscribe to this channel on YouTube. Whether you're looking for opportunities to invest some money right now, or you want to make sure your investments are doing well, you need to know equity, bonds, and mutual funds. We are covering these in our weekly updates to you. So please keep coming back to this channel every week. We bring you new updates about equity, bonds, and mutual funds every week. The property markets update for this week. The top stories from the property market this week are: WeWork raises substantial doubt about its ability to stay in business. HDFC Bank picks up 1 lakh square foot in Blackstone's Mumbai Towers on a 5-year lease. Maharera appoints intelligence agency to get real-time project information. Home loan, other borrowers can switch to fixed rate regime according to RBI. And lastly, Uttar Pradesh to bring core development policy to revive stuck projects in Noida and Greater Noida. Mohan, in our conversation earlier, you were telling me that it is important for people to know property as an asset class. Why should people know property as an asset?
That's a good question, Raghu, because what happens is, let me give you a clear picture before I answer this question. We know what is net worth. Net worth is something, whatever you are worth, means what is your financial assets. The assets means it could be property, it could be stocks, your bank balance, all that is an asset. Now, let's see the richest people in the world. What are the richest people? Let's say someone like Adani. If he is worth, he is the richest Indian today, we all know, and in a very short period his net worth, let's say if it is 50 billion. The people like Adani or people like Ambani's, such people, the richest people in the world, their net worth is because of whatever the business valuations that they have. What about common people like us? Somebody who has worked for 20 years, 30 years as a vice president, as a CEO, as an executive, as a senior management guy, or a businessman who is doing well in life and a very successful businessman, maybe running 50 crore to 100 crore turnover kind of companies, and he may be worth what, 20 crores, 15 crores, and this what we call commonly rich. Now this people, if you see what is the majority portion of their net worth or their assets, it is mainly properties. We have seen in last 10 years of this advisory business that every customer who comes in, when we list out, we do the detailed financial planning and do net worth advisory. When we have done that, we have always seen when somebody comes in, someone who has done well in his life and good assets, if he is worth 7-8 crores, his total net worth, including all his properties, current market valuation, his investments, his PF, his bank FDs, all if you add it, minus maybe 10-20 lakhs worth of loans. So the net worth of 8 crores, 90% of that, let's say 7.5 crores is only in property. Now you tell me, if you have majority of your investments, your net worth, the lifelong earning is in property, should you not know about property? At least the property market. How can you ignore? And people are interested in stock market, they are interested in mutual funds, but what is the portion of investments out of their wealth? If their wealth is 8 crore, they hardly have 10 lakhs in stock market. They hardly
Certainly.
have 40, 50 lakhs in mutual funds. But they do so much of study on mutual funds, stock market, where they have very less money. But the majority of the money is in property. They should understand property well.
It is very true of most people.
Absolutely.
So, what should people know about property as an asset class?
See, property, there is lot of things in the news in the market, and the real estate, builders, and there is a lot of noise level in the market. That is not useful for common people. What is important for you? First, you understand what you already own. Let's say you are a senior executive in a company and you are a CEO or a vice president or you are a businessman, and you hold about 5-6 properties, maybe the house that you are living, and you also have couple of plots, other 1 or 2 flats or independent house where you are getting some rent. The first thing you should do is list down all your properties and understand what is their worth today. Is it growing at the right rate of growth? Usually the properties growth in the long term, 10, 20 years, 30 years, it won't cross beyond 9 to 10%. Particularly in metros, in the last 10, 20 years, maximum growth that we have done in our analysis is only 15% CAGR.
Yes.
And if you see, the markets have grown at the same rate in the last 20 years. If you had invested in mutual funds, what you had invested in property, it would be more or less the same, or the property valuation is lower if you compare all the properties that you have. So what I suggest, the best thing for people to do is, the properties what they have, they should do an audit of all the list, all your properties, see whether the valuation is growing up. Is it becoming attractive? Because that is what you own the maximum. If you have 90% of your assets in properties, then should you not take half an hour or 1 hour in a week and go through whether it is giving you, whether it is growing in value or not? If you are getting a rent, is it substantial? Out of all your expenses and everything, are you really able to make anything substantial? So you should know how much of your assets are in property. Should it continue to be in property, or should you make changes? If you want to still buy property only, buy where it will grow in value, because it cannot lie idle. Because for 30 years I have owned the same plot, I never looked at what is the market valuation. I always feel my property is always growing. When you actually go to sell your property, you will come to know that everything what you are thinking is a daydream. And when reality comes in, you feel that it is only going at that particular rate. And if you calculate the CAGR, it is not substantial. So what's important? Our hard-earned money. For so many years, we have saved money with lot of difficulty and bought these properties because we didn't know anything else to do. Now it is time you understand what you need to do with your properties and take action. And if you need help, we are there. Get in touch with our office and meet our people, meet our experts. And we do this analysis, the property asset analysis, and we have a specific advisory solution that is for net worth advisory. We do this only for people who come in search of it. And today we are telling that you should do, everybody should do this, and it is very, very important. Your hard-earned money only you can protect and only you can grow. No one else will be interested in what your property value or your assets, whether it should grow or not. Only you should take interest.
Thank you, Mohan, for the insights on the most heavily invested but less cared for asset class as properties. If you liked watching this news, please subscribe to our channel on YouTube and come back next week at the same time. We would be glad to see you here again. Thank you. Thanks again for watching. Signing off, this is Raghu.